So you're looking to buy a house and you have student loans and you're worried, what is this going to mean to my ability to qualify? Well, stay tuned and I'll give you all the information you need. Hey everybody, John King with Summit Funding, and I'm here to give you some wisdom about student loans and how they impact your ability to qualify when buying a home. So a little bit of backstory, as you all know, student loan debt has ballooned and it's created a significant challenge both in the overall economy and specifically with the mortgage industry. We set our guidelines based upon what historical data tells us that someone that has these particular criteria, someone who has a certain amount of debt, has a certain amount of income, they're going to pay their bills a certain percentage of the time. But we don't know how to deal with someone who has a huge amount of student loan debt, especially because of how creative the student loan industry has become in allowing people different ways to repay their student loans. There are regular payments, there are graduated payments, there are income-based repayments, there are deferred and forbearance loans. There's a lot of different ways in which your status of your student loan can be. And the challenge is that each of the different entities, and when I say entity, I'm referring to FHA, VA, USDA, Fannie Mae, and Freddie Mac. Each of them have different rules on how to apply your student loan debt. So I'm going to give you a basic overview, but really what you need to do is come to see an expert like me so that I can help navigate the waters for you. So these rules have changed relatively often. They've become a bit more stable in the last year, but don't be surprised if the rules change again. This is April of 2019, so if you're watching this some point down the road, you got to be careful and make sure that the rules I'm talking about are still applicable. Good chance is they might have been modified a bit. Here's the deal. If you are in repayment phase of your student loans, then in general, a Fannie Mae loan is the best option because Fannie Mae lets us use whatever your monthly payment is as long as it is a monthly payment. So if you have an income-based repayment loan and your income is low enough that they don't require any payment or their payment is $10, I get to use that number on Fannie Mae. But if you don't have a payment reported on your credit report, Fannie Mae is the worst option because if you're in deferment or forbearance, Fannie Mae forces us to count 1% of your loan amounts as your monthly payment. If the case for you is that, where you don't have a monthly payment on your credit report, Freddie Mac is the better choice because Freddie Mac says we can use the higher of the actual payments, which in this case you have no payment on your credit report, or 0.5% of the student loan balance. So Freddie Mac is a better choice in that scenario, and the rates and terms are pretty much the same between Fannie Mae and Freddie Mac. It's what you would think of as what we call a conventional loan. So that's a good example of how the rules differ depending upon program. I'm not going to get into FHA, VA, and USDA because it'll just make your head spin. But rest assured, if you or someone you know has student loan debt and they're not sure how it's going to impact their ability to qualify for a mortgage, give me a call. I'm an expert in navigating those waters and I'll walk you down the right road. Thanks for listening and have an absolutely amazing day. Bye-bye.